In this video, I'll be sharing with you how to properly trade divergence using the RSI, that is the Relative Strength Index. So in this video, I'll be covering, first of all, what is divergence, which is very important, and the best RSI divergence setting. I'm going to show you the best setting that you can use right now to scale up your trading all the way to the next level using divergence. And I can tell you, the setting you are using right now, or if you're using the default setting, you are using probably the wrong parameter. I'm going to show you the best setting to use in this very video, and divergence entry confirmation that I use after I have spot out divergence on my price action, and lastly, the strategy on how to enter your trade. This is very important. Watch this video all the way to the very end. The first thing we need to do here is to put the RSI indicator on our price action. So you simply go to this indicator tab, and right here I already have it under favorite, so I don't need to search for it. I will just right here click on it, and you see that the RSI is now on my price action right here. So what I will do right now is to go to the settings right at this very point, and I will change this very setting later to suit what we want to do. But first of all, I will untick this very RSI base MA, that is moving average. We don't need this, and then I will simply increase the visibility of this so that it will be visible very well on our price action. The next thing here is, what is divergence? When do we say divergence have occurred on our price action? If you look at this very area right here, divergence occur on this very price action. Why? Because if you look at price was moving downward, we see this very point right here, which is a low, and we see this very area, which is a lower low, okay, compared to this very low right at this very point. So market is coming back down in a lower low formation. But if you look at exact same point on the RSI indicator, it is called that market is moving upward, creating higher low. If you draw exact same point from this very area right here to this very point, it is covered that market is moving upward on the RSI. This means that a divergence have been created. If you look at it critically, discover that market move from here and come back down to this very point right here. But on the indicator, market move from this very area right here and is sloping upward. And this is a confirmed divergence on price action. So with this, we can trade this all the way to the upside once we have a confirmation. And of course, this kind of divergence is what we call a bullish divergence. Why? Because market was coming back all the way to the downside. From this very point, market come all the way to the downside. It means that if we get a confirmation on this very divergence, market will begin to move all the way to the upside. That is why it is called bullish divergence, and this is super important. So this is an example of a divergence. So when price action is moving downward and the indicator is moving upward, there is a disparity between these two movements. Well, that is only when we say price action have diverged, okay? And for example, in this very case, if divergence occur in your price action, it means a massive trading opportunity all the way to the upside or to the downside. So in this very case, this is a bullish divergence because market is going to from here move all the way to the upside, as you can see on price action. The next example here is right at this very point. If you draw from this very area, from this resistance level to this very point of resistance, it is covered that markets have been moving upward, creating higher high. But if you draw exact same point on the RSI indicator from this very area to this very point, it is covered that markets have been coming back down on the indicator, creating higher low, which is super important. So when this creates itself on the price action and the indicator, it means that the market have divergence. So in this very case, since it occur at resistance right at this very point, then it means that the market diverge, and this is a bearish divergence. What that means is, since market has been moving upward, then we see this very pattern formation from this very divergence, then market is going to begin to come back all the way to the downside. That is why this kind of divergence is called bearish divergence. And if you spot it out on your price action and you pick a trade, that means you're going to ride massive trend all the way to the downside, and this is super important. So these are the divergences we have in the market. We have bullish divergence and bearish divergence, which is what you must have to pay attention to if you want to trade divergence very well on your price action. The next thing here is the second thing on this very list, which is best RSI divergence setting, which is super important. All you need to do to get this very setting right is to come right here to this very point setting, and then you come right to input. Under input right here, you see RSI length. We want to change this length to 16. Okay, this is the best setting in my opinion that you can use to spot out the most accurate divergence using the RSI indicator. So put 16 here and leave every other thing the same, and I will come here and click OK. Once I do that, you see there is a little bit of shift in the RSI. This helps smoothing out and filter out false signal, okay, by the RSI. So this very setting is very important if you really want to be in the right direction of the market when you are trading RSI divergence. The next thing here, which is also very important, is the divergence entry confirmation, which is what we need to really dive into right now. If you look at this very area where divergence occur at this very point, it is covered that market move all the way to the downside, but we want to be very sure with certain confirmation that market is going to come back down after we've seen the divergence, because sometimes you can see divergence and market is going to go the opposite direction and not the direction that the divergence indicate that the market is going to go. And we want to be very sure with this confirmation. So the first thing is you spot out the divergence on your price action. Let's say example, in this very case, we have this very divergence right here. Market is moving downward from this very point to this very area, which is very clear on price action. And if you come to the indicator, the same point right at this very area, one thing that you must have to do for confirmation is that you must take the RSI that enter into overbought and oversold to be very important. For example, in this very case, this enter into oversold right here, and this only touch the line, so we want to consider this a very important divergence to trade on our price action. That's the first confirmation. And the second confirmation is we want to see the trend line break, which is super important. So if you look at this very market come back down, you have to draw a trend line from this very point all the way to this very area, so that when the market move upward and break out of this very trend line right here, we want to take a trade. Okay, that is confirmation number 2. Market should break out of this very trend line right here. Once we see a breakout, then our confirmation number 2 have been made, and we'll look for confirmation number 3, which is super important. So this is what you need to do to better your entry, which is very important as well if you want to trade the RSI divergence the right way. The third confirmation that I normally use when trading the RSI is I want to see a bullish candle. For example, in this very case, this is a bullish divergence. So I want to see a bullish candle that close above this very trend line right here. What that means that it signify bullish momentum in the market. Market is not going to go down, and even though market go down, as we see in this very case, market is still going to move all the way to the upside. So 3 confirmations before you take your trade when you are trading divergence using RSI. Number 1 is that we must ensure that this very RSI enter into oversold, as in this case, when considering bullish divergence in this very case right here. Okay, and the second thing is we must see a breakout right here. You know, breakout can be with a bullish or bearish candle. And confirmation number 3 is that you must see a bullish candle that close above that very trend line. Example, in this very case, that is only when you can take your position. Let's say, for example, we take a position after the market begins to move all the way to the upside with this very bullish candle right at this very point, and then your stop loss obviously should be at this very area, and you look for 1 to 2 risk reward ratio, which you will definitely get from this very strategy. And you must also understand that this strategy will work on any time frame, be it you're using the 5-minute chart, 15-minute, 10-minute, 30-minute, 1 hour, 4 hours chart. It works perfectly well if you follow this very strategy. So once this confirmation is reached, you take a trade after the close of that very bullish candle, and your stop loss obviously should be below this very point right here, where the market dipped down to create a new low at this very point. Slightly below this is where your stop loss should be, and look for 1 to 2 risk reward ratio, and you're going to get it. And this is super important. This is what you should do. And as in this case, see the market begin to move upward into this very area. The next example, which is for bearish divergence, is at this very point. If you notice, market is moving upward in this very direction. So if I take this very trend line 2 and I drop from this very point to this very area, you discover that market creates a new high. Market is making higher high on price action, but on the indicator, you discover that market is coming back down, creating higher low, and this is a bearish divergence because this occur at a resistance. Not only that, market is moving upward, and the best place to put your divergence is on the close of the candle. Don't use the wick. Personally, I don't use the wick of this very candle. Like example, in this very case, some person use the wick like this, but I prefer using body to body. Okay, so the close of this very area to the close of this very area, and then I draw it out again on the indicator. This is very important. And if you look at this very area, this is a clear bearish divergence, but you will not just take the trade right at this very point. You need to wait for the confirmation to reach. Once you see those trade confirmation, then it is good for you to enter. The confirmation number 1 is that the market actually enter into overbought condition, in this case of bearish divergence. 2 of them enter into this very area, which is very clear. And then confirmation number 2 is we want to draw a trend line from this very point to this very area, and we want to see the market break out of this very trend line, which is what we want to see on price action. So if you look at it, and if I play this out, you discover that market, come back down to this very point. We see a breakout at this very area. So this very breakout is where we want to enter our trade. That is confirmation number 2. And number 3 is this very bearish candle right here that formed at this very point. We want to take a trade immediately after this very bearish candle. Why? Because this signifies that after the breakout, the bears are still in the market, and this is not a fake out. What that means is market is not going to from here begin to move all the way to the upside. Rather, with this bearish candle, it is certain that the market is going to come back down. So we take our short position 2 for a sell and place it right at this very point. Of course, your stop loss have to be slightly above this very point of higher high. Once you get that set, look for 1 to 2 risk reward ratio, and you're going to get it right here. And market is going to move in that very direction to our target, and this is super important. So if you look at this very trade, this is a clear divergence of the price action with all the confirmation meant. And if I continue to play it out, it is called that market begin to move in that very predicted direction using this very strategy. The setting is the most important thing right here. You must pay attention to the setting. What you need to do is to come down to this very point right here where you have setting on the RSI indicator right at this very point, and change the setting to 16 instead of using 14. And once you are done with that, that's all. Click OK and find out this confirmation. Once you get the confirmation, 3 confirmations, take your trade, and market is going to move in that very predicted direction. And this very strategy, like I said earlier, apply to every other time frame. It works on the 1-day chart, 4-hour chart, 1-hour chart, 30-minute and 15-minute chart, as the case may be. If you apply this strategy very well, you should be in a good winning trade, and it works 75 to 80% of the time. And however, you can as well backtest this very strategy to see how it work out for you. And this is super important. Consider supporting this channel by leaving a like for this video, subscribe if you have not, and turn on the bell notification for more forex videos like this one. Also check the channel for other forex content. Join our Telegram channel, link in the description of this very video, and also in the pinned comment for more forex videos, technical analysis and trade signal. If you want to watch my other video on the channel, check this video out. It's going to help you greatly. And check this video out as well. It's going to help you greatly too. Thanks for supporting this channel.